Okay, now to a very big view, not just on the markets. So Edelweiss is a stock in focus as well. Brokerages have been in news by virtue of the market uptick that we've seen. Edelweiss has just initiated an NCD issue, or rather will initiate an NCD issue. A marquee investor has gotten into the stock, so there's a technical trigger as well. So much to speak about, business and otherwise. Rashesh Shah, Chairman and CEO of Edelweiss Financial Services, joins us right now on the show. Mr. Shah, really good having you. Thanks so much for taking the time out and joining us. Now, let's just first talk about the topic at hand, and which is that NCD that you're launching in about a couple of days' time from now. I believe 12% coupon rate as well. Why this fundraising program, and what will the funds be used for?
See, this NCD is being issued by our NBFC arm, ECL Finance, and we are currently issuing unsecured NCD for 70 months at a coupon rate of 12% on a monthly basis, which comes to about 12.68 on annualized. And the size of the issue is 200 crores as a base, and with a green shoe option of another 200. So altogether it should be around 400 crores of the issue size. We are raising this on our NBFC arm, which has been growing fairly significantly. In fact, it grows at about 25 to 30% a year. And historically for our NBFC, the borrowings we used to do was from mutual funds and banks. And in the last year onwards, we have started opening the third source of financing, which is a retail bond market. And we do think in the coming years, we would expect that our annual requirement of funds, about 20-25% of those, we will come to the market. We'll still meet a large part through the mutual funds and the banking sector and the insurance companies. But I think it's a good, on a long-term basis, a good source of stable financing for us.
Would this be the only fundraising in the near term, or do you expect that Edelweiss as a house would need to raise more money to fund its expansion plans, if any?
No, as you know, we have more than adequate equity at a group level. Our current net worth is more than 3,100 crores. So we don't need any equity raising for sure. On the bond side, I think, as I said, we may end up doing one or two very selectively issues in a year, but that depends on the growth path, on the availability of funds, on the cost of funds and all of that. We are at a fortunate stage that liquidity has been very easy. Interest rates have been inching down, and over the last few years we have built a very good source of financing from banks, mutual funds, insurance companies. Now FI has also started to come in. That will also become a fairly good source of financing, and the retail bond market. So I think, like any other financial services company, on your borrowing side, for your borrowing requirement, you will use multiple sources of funding in a good combination.
Mr. Shah, so glad that we could get you, for an interaction today, given that the stock is doing so well, and not just today, it's doubled investors' wealth also so far in the year of 2014. As a whole, can you just tell us how business is shaping up? I'm sure that all of the segments will be seeing very strong traction going forward, but which end of the business is going to lead growth?
On stock, one of the things we always believed is ultimately it is the earnings on a long-term basis, your growth rate and your earnings, which should get reflected in the stock price. So I think in the short term, obviously currently there is a drive towards mid-caps and cyclical, especially all these sectors which will benefit from economic growth coming back with the new government. And obviously capital markets, NBFCs, financial services companies have come back on the investors' map in that sense. For us, capital market businesses have had about 3-4 years of consolidation. Fortunately, in these 3-4 years, we kept on investing in the business. We increased our capacity, we improved our offering to clients, invested a lot in technology and the platform, and we are seeing some growth coming back as investors come back to the market. And we always believe that equities is always going to be an optimism game, because when people are optimistic about the economy and the growth path, equities always do well. So I think that part of the business is doing well. Our NBFC and the housing finance business has been steadily growing. So if you see our results for the last couple of years, we've been growing at 20-25% in spite of the environment for the last 2-3 years. And if the economy improves, then what I would expect is maybe the growth rate will inch up. But over the last 4-5 years, we have diversified in capital markets, credit, commodities, insurance and asset management, and we have a range of businesses and products across these various segments, which has given some amount of stability to our growth rate now.
So the question that comes top of the mind is that the market believes that with the equity market starting to look up, the broking revenues could shoot up. I was looking at your last year revenues, and the total income from fee and commission was at 350 crores if I'm not wrong, out of a total basket of 2500 crores. So that's not a very large contributor. How big a delta can broking revenues or equity market link revenues provide in this year and possibly the next year?
See, increasingly for all the broad-based financial services companies, for the diversified financial services companies, the agency business is usually not a large part of the top line, but can become significant at a profit level, because these are like on your NBFC, you have income but you also have interest cost against that. So if you see it from that point of view, if we take our gross revenue and take the interest out of that, fee and commission income has always been about 20-25% of our total revenues, and we do believe that will inch up if the markets are good, because activity, fee, commission, investment activity, as it goes up, fee and commission goes up. And for most of the diversified financial services, we would expect that their ROE should inch up between 2 to 4 percentage points through this upsurgence in capital markets, because I think the capital market, the advisory business is highly ROE driven, because it's not very capital intensive, it is people intensive, but it has in a robust market, it does add to your ROE. So for most of our other peers in the market and all, our expectation is that you should expect to see a 2 to 4% improvement in ROE just as a result of capital market and all the other growth factors on other parts of the business, because broadly as a financial services company, you are correlated to the growth in the Indian economy in some form or the other. Like credit is not as volatile, but it is also correlated to the growth in the economy. So I think there will be growth in the other parts, and capital market may end up growing a lot faster, because last 3-4 years there has not been any growth.
Then the numbers that you're mentioning are pointing to a really robust picture. Your total income was 2500 crores, working with an assumption that will grow 20% in this year. So out of a total income of 3000 crores, if fee and commission would be 20%, that would mean fee and commission could actually have a top line of around 600 to 650 crores, which would mean doubling from the last year. Is that a possibility?
No, actually I don't want to make any forward-looking statement, Neeraj. I think it's only the first quarter. Even our first quarter results are not yet finalized, and I think people are extrapolating a lot more. I would want to reiterate that I think the growth is coming back, but I think we have to see how things pan out for the whole year, the government policies and the budget and all. So overall, if you look at the market volumes, they have gone up. Cash equity volumes, overall volumes, all of that has gone up. We expect investment banking, which has been slow for the last 3-4 years, also to pick up. So to answer your first question, will there be pickup in the volumes for fee and commission for everybody in the capital market? The answer is yes. The quantum, I would not want to hazard a guess, because we are only in the first quarter and we still have to go through another 3 quarters of the year. So it's not a good place to make any forward-looking statements.
Fair enough, Mr. Shah, but can't have you on the show and not garner your market expertise. But so wanted an overall outlook. You mentioned quite a few times that the growth is fairly intact, but I wanted to know if you think the markets have run up ahead of themselves and that now we might see a little caution prevailing ahead of the big budget event.
I think the market should consolidate, because all investors have also seen a big rise, and everybody is, there is a bit of a sticker shock in terms of price, that all the prices have changed so much. The investors are saying maybe we will hold back, which is a good healthy thing, because I think now I think investors will carefully pick stocks, they will buy on dips, they will do all of that. What our analysis of this whole thing is, what we have seen in the last 3 months has just been a cyclical rebound. For the last couple of years, things have been so repressed and there was so much gloom doom that at the first sign of optimism, there is a cyclical rebound, which actually started in October. So October onwards, the markets have been in an upswing as India currency and the macro also started falling in place. So this part of the market rally or the optimism is more a cyclical rebound from a very low. We think the structural story of India, which will unfold through reforms and opening up of the economy and the start of the investment cycle and all, will come through the year. So I think now investors will also wait for the structural elements to come back. The cyclical element is over, the structural element will come now.
Let's wait and watch for that. Thanks so much for joining in, Mr. Shah. But before we let you go, just one quick question on the sporting end. Are you running any triathlons? Are you going to see the World Cup in Brazil? Anything up in the next 1 month?
I think unfortunately this is also a year where activity is very hectic, as you've been also saying. So there is a huge amount of work, but I'm hoping to run the New York Marathon around end October. So I think fingers crossed, all other things being equal, hopefully I should be able to add that this
You
year.
want to miss out on the market action either.
Well, I guess it's par for the course. But great having you, Mr. Shah. Thanks so much for joining in today.
Thank you.
And all the best with the NCD issue as well. That's Edelweiss Financial Services. Mind you, the stock has gained quite a bit. A big investor, Rakesh Jhunjhunwala, has bought in 1 crore shares, I believe, in yesterday's session as well. He has bought shares. I'm just talking, I think it's 1 crore shares. And the stock has been active too. 4.5% up in the session. Prakash Gaba, a word on Edelweiss Financial Services, one. And then what's the view on the markets too?